Welcome now, Stock Trades. In this video, we're going to go ahead and talk about the net income part of Clover Health. So yesterday we spoke about the free cash flow and other metrics, and today we're going to break down and go a little bit deeper. Okay, we're just going to add another layer of slice, and we're going to continue adding this on until we get the whole picture of where Clover Health is going to go. So before we start, I wanted to basically take a preface. Over the past about 1 to 2 months, I've been watching the Reddit Discord group, because I post the videos on there. And I must say, the sentiment has changed. And the sentiment now is definitely near the bottom. I mean, we're talking about a really low sentiment here. I've had comments that it was very hard to read saying, oh, if the stock drops this low, there has to be something wrong. It's a terrible company. There has to be a reason why it's this low, and all of these sorts of things, right? And essentially, are you going to speak loudly today? So not for this one, not for this one. This one's it's still good. I mean, the information is still good, but we're gonna, I don't want to let my throat down too much a little bit here, right? All right, so this company, Clover, has been around trading wise, has been around since June 12 of 2020, based off of Google here. Okay. But the company has been founded back in 2014. So it's been there for a minute. But as you can see, 2 years and a half, 2 years is not a lot of information, guys. That's, 2 years and a half it is, I definitely already did. 2 years is definitely not a lot of information, guys. And, a company needs time to build itself, especially at the level it's trying to grow out of New Jersey. So if you don't recall, yesterday we made a video breaking down all of these graphs below us here. Okay. Today, we're going to go ahead and move to the right, and we're going to just solely look at net income. Okay. I hope you can see this. Okay. So if we go ahead, and I really appreciate that, definitely really passionate about teaching, right? So we're going to ignore 2020 because, again, they came in and, half of 6 months into the year, you really can't use that data. So you really only have 1 year's of worth of data to work with. That's why I said, I'm very patient with this company because I still need to see more data. But overall, we could make some trends and some analysis here. So we have quarter number 1 of 2021, quarter number 2 of 2022, quarter number 3 of 2021, Q4 of 2021. That's 4 quarters. There are 4 quarters in a year because there's 3 months times 4 is 12 a year, right? A quarter happens over 3 months. Okay. The thing is, here's 2022. We have Q1, Q2, and Q3. But guess what? Q4? I don't know. Q4 hasn't happened yet. We're living through it right now. So I don't have the data for Q4. But what I can do is I can take this here. I can take these numbers here, Q1, Q2, Q3, and find the 2021 Q1 to Q3 net loss. So last year, from quarters number 1 to quarters number 3, they lost around $400 million. And that's even with this really, you got to dig a little deeper for this negative 34 million. But that's $400 million. Now, if you take Q1, Q2, Q3, and you take those in together, 2022 from Q1 to Q3, they have a net loss of negative $254 million. The difference is 36%. So far, Clover Health went ahead and decreased their net income in terms of their loss from 400 million to 254 million, a difference of 36% improvement. So it says here, Q4 might be higher only based on history. Well, we only have this history here, 187 million. We really can't use this. This is off because, what other history do we have? You must be talking about this. This is the history you're talking about, right? I mean, it might. Who knows, right? I mean, we don't know, right? But overall, if it doesn't become essentially higher, then we might actually see net loss lower. Absolutely. No, I'm really happy. It's been a while, right? I haven't broken down the trend line analysis. And I agree. Smash that like button. Please consider subscribing, as it will help with the YouTube algorithm to get out this information. Okay. So overall, you have Q1 to Q4. They lost $587 million. So we'll see right now where this is going to be. We don't know yet. We can't do the net loss of the year because the year isn't over. Well, all we know, if you look at from Q1 to Q3, we improved 36%. We improved 36%. So that's definitely a very good. I mean, imagine if this was $500 million in the negative, and that's only Q3. Then I'll be a little bit more worried. But overall, we are headed in the right direction. This is exactly what you want to see, right? So because I think this is good. Let's go ahead and pick a quick comment here. And I spoke with this individual before. I just made a new Reddit page here, so let's see how. Is it profile? Yeah, let's do a profile. Let's look at posts. No. Maybe comments. No. Let's see. Let's look at see all. Okay, this is a good one. Okay. I like you, Al. I think you are very helpful and have good intentions, but you seems very angry and emotional right now. Give us a smile. So, I'm not like emotional. It's called passion, right? And the reason why I'm maybe come off a little bit angry, just a little tad, guys, Mr. Viva, right here. Let's go back to your comment. You commented to me before, and I'm just like, oh man. Let me see if I can find it. I might have to go to your history and search. There it is. I think it's this one. Let me see. I hate to isolate your comment, but it's okay because it's not like your name's on there. So let's see here. All right, here it is. I think this is it. I may be wrong. I'm just gonna read it. Thanks, Al. But I think a fairer thing to say is high risk speculative trading is not for everyone. Okay, I agree. I know many investors that have bought safe dividends paying companies for years and earn a nice income. Okay. They can safely buy more. CLOV is a all or nothing play in. Okay. This is where I don't agree. I don't even know if this is the exact statement that I was referencing from the beginning, but this is something I don't agree with. CLOV is an all or nothing play, in my opinion. What? Okay. It's akin to trading rather than investing. What? One for about 10% of the portfolio. Okay, in terms of Benjamin Graham's ideology, I agree with this one. In terms of having a speculative portfolio, in terms of speculative, definitely under 10%. Unfortunately, many on the Reddit praise, this is wrong. You should not have this 100% of your portfolio. But I disagree. CLOV is an all or nothing play. It's not investing. It's just trading. I beg to differ. I don't agree with that, right? But again, everyone has their different opinions, and that's fine. But I just wanted to respond to that because let's see. I think was it this one here? Let's see here. Let's listen to here.
You're not back that yes stocks should be crashing because they were all overvalued, but they should not be back to those prices pre-COVID. CLOV, on the other hand, has become a penny stock because listed during bull market at a stupid price, duping many retail investors. I get stocks are crashing due to the overall market economy.
This is it. But when a company crashes this hard, it's more than just the economy. So there's a little truth to this, but there's also a little bit error. right? So the point of me pointing this out is, when you have a group of folks that are essentially derived from Wall Street bets, it's definitely a terrible place to be on, because before even 2020, they were losing a lot of money, and that was like a good market too, right? They were buying some really weird stocks. I always just looked at them in terms of like people down like 200,000-300,000, like, oh my lord, right? Um, the the thing is, we knew this company was unprofitable. The goal was, given the economic conditions with easy money supply, we will continue with the burning of cash in order to grow. I mean, that was kind of the understanding. Honestly, the biggest problem was Jerome Powell misinterpreting the signs of inflation. He specifically stated that inflation is transitory, transitory, transitory. And, we were all suckers to believe in him, but he, let this be very clear. Um, he really screwed up this whole economy by allowing and printing cash longer than what was needed. If inflation rose to 5-6%, that's doable. But once you start getting up to that 8-9%, that's when things get dangerous. You get into those double-digit inflation. And guess what? It was double digits. Look at rent. Look at your food. It didn't go up by 8%. The CPI is literally another word for CPI, right? But overall, you have a group of folks on a Reddit page, stocks go down, and a lot of people don't know what fundamental analysis is. They think the PE ratio if you know that, then you know fundamentals. It's way more deeper than that, guys. It is so way more deeper than that. And I'm going to try my best to show you, but it's way more deeper than that. But overall, this is what you have to do in order to see if a company is headed in the right track. You got to look at their net income, and you got to see, is it tracking along the way? And what it looks to me is it is. I mean, I hope you see the math. So in terms of this particular person here, Clove is 92 cents. How is he wrong? Clove is speculative. Well, in that nature, not because of the 92 cents, again, what most people don't know is what's interesting. What most people don't understand is you need to disassociate the stock price from the fundamentals of the business. You have to look at the underlying business. What changes happened with Clover, right? So I got another question. So I answered somewhat your question. You have another question. How is Powell responsible for what's happening with the company? So there is so when you have growth companies, what did Powell do to the interest rates? People can answer if they please. Powell increased the interest rates for the whole economy. When you increase the interest rates for the economy, what ends up happening is money becomes more expensive. So everyone's discounted cash flow statements they start changing it. The discount rate starts to go higher. What is a discount rate? Discount rate is essentially if you were to extend the company 10 years into the future and discount back at a 10 to 15% discount rate, then you would get to the actual value of the company. The problem is, because the economy became weak because of the interest rates going immensely high, because they're trying to slow down the economy from spiking due to the inflation, what ended up happening was it caused the DCF rates amongst all analysts, discount rates, to go up. Hence why a lot of stocks go down. Okay. So exactly. Rates go up, growth companies are affected. Right. And I believe there was a comment in November of 2021. Andrew Toy made a statement. Let's see here. You remember that? Let's see here. I'm going to Google it right now. Recession a quiet period. Clover Health. I think I found it. Here it is. There it is. So to answer your question, and I get it. I understand what you're saying here. How is Powell responsible for what's happening with the company? So this was back on December 17, 2021, a month after the quiet period, after they did the share offering. So if you go here and you go to recession, I want you to read this, okay? You look at here, while timing the market is not something many consistently do well, we believe that waiting until next year to raise capital was too risky, given the possibility of a combination of potentially rising interest rates and a possible recession. The reason why Powell is responsible for this is these interest rates rose more than what they needed to rise because inflation became unbearable. There's been a huge contraction of liquidity. IPO rates and SPACs rates and generation of trying to get those into the market have essentially been destroyed. Growth companies that are essentially affected, people leading to flight from technology-driven growth companies to companies that are essentially value-based companies. Okay, so I hope I can explain this to you, Paul, and I hope that this was a good way of massaging things out to talk about. But I understand with this. But going back to your first question, 92 cents. How is he wrong? Clover is speculative. Well, I mean, is it a speculative pay? Yeah, it's unprofitable right now. With that respects, I do agree with you. But to associate the stock price with its speculation. So if Clover was an $80 stock right now, would it still be speculative? Right? So that's kind of the thing that retail investors that I've seen. But overall, many folks are saying, when a company crashes this hard, there's something more than the company, or all of these sorts of things. If I were to compare when many people were buying here, remember when people were buying June 30th, Clover literally lost. So if we go back to the short squeeze, which I wasn't a part of that, right? I came after because I was like, oh, this company actually has value. Back here on, right into this one here, on June 11th, 15. So if you go back here on June 11th, it was more than $15. It was $28, but Google's showing 15 because it was intraday. It didn't close that. You had to day trade it, right? If you go back on June 11th of 2021, you're telling me that if I were to add these two, these were the net losses thus far for Clove. They lost $336 million in the first 2 quarters of 2021. And now we're 3 quarters in 2022, and we are at a loss of 254, way less than the $366 million that they lost in the first 2 quarters. So you're telling me, was it not speculative then when it was going up, or was it trading anywhere between $10 to $7 to $28? So at the end of the day, the fundamentals always stay the same. These numbers are not going to change. Nothing changes these numbers. These numbers are engraved within the history of Clover, which is good because they cannot be manipulated. You can use these numbers to essentially track the progress of the company. So overall, this is what I see, and we can graph. I think we can graph this like this. I might have to change it. Yeah, you can't graph the names. So what you can do is you can go here. You can't take the numbers. It's fine. It's very clear that this number is more negative than this number. Okay, let me zoom in. Okay, this number is more negative than this number. There's a 36% efficiency improvement in Clover's ability for net income. So let's go here. Hey Al, why isn't all your content going up on YouTube? I think it's under the live section. So that's good to talk about here. So if you go on YouTube, And if you go here to channel, and I'm going to start posting more. I just like the lives because, oh, that's weird. I don't know why that guy popped up. It's kind of weird. If you go to videos here, there's these videos, but if you go to live, then you'll see this video right now. In fact, let's click on it. Let's see. Oh, that's it. I can see myself. Okay. Don't forget to smash that like button. All right. And hit that subscribe. It'll really help out the channel. All right, guys. So that's pretty much what I have for you guys. I wanted to make a slow down video. Okay. And I will post more videos on the video section, but it's good to have this interaction sometimes, right? So when does Clover become profitable? So no one has a crystal ball, but have you listened to the most recent earnings report on them talking about them prioritizing profitability? So we can go ahead and we can speculate on that, but overall, it's important to look at their trajectory. My personal, opinion is we are going to see the power of Clover in 2025. 2025 is going to be a wonderful year. Okay. In fact, for all of our members, today we had our monthly meeting. And so actually, yeah, so we did PSFE, so added on to the stock requests. So if you go to our private group, and if you go down here, you can add your stock requests here, and we can educationally go over them. And then we have our meetings here. We already had our meeting today, which was very, very great. But I wanted to go ahead and explain something of interest really quickly regarding the economics. So if you go ahead and look at the Federal Reserve Variable Shifter, and this is part of the alstocktrades.com, it's where I'll be able to find all these. So I want you to go, so these are rising interest rates and these are depressed interest rates. We want to go from 2009 and all the way to 2015. So let's avoid these. Let's go down. Okay. Let's go down. So okay, we'll do this one here. This will be a great video, and we will add it to the live, and we'll make our own video here too. So the Discord, unfortunately, is not free. It costs me thousands of dollars to host this data that we get. It's pretty much data that usually, it's like tip ranks is $30 a month. We have that. We have so many analyst price target projections, intrinsic value. Unfortunately, we in order to keep the lights on, we have to charge, and it's $20 a month, and we do have a lifetime access. So if you go down here, when you decrease interest rates, this is the federal funds rate, right? When you decrease interest rates, what happens? What happens to the market? So here's the S&P 500. When it decreased interest rates, look what happened to the S&P, and look what happened to interest rates. So the stock market fell. Look at that, right? Right? And interest rates fell. And then we have the next period, the zero interest rate period. So once things fall down to 0%, that's when stocks do well. But hold on. I think the market's becoming more efficient now. So I think this might be faster, right? So if you go down here, and we're going hyper speed with this. This is why it's very great. It's why it's a great educational program here. Okay. So if you go down, so what happens with the zero, this era of 0%, literally almost, go to a good amount of 7, 8 years. Look what happened to the S&P. Look what happened to interest rates. So I'm going to scroll down. 2011, 2012. Oh, interest rates dropped. Look at that. Interest rates are great. And look what happened to the S&P. The S&P was at $900. Look what happened to the S&P. $2,000, literally more than doubled the S&P. Interest rates dropped. So see how powerful this is, right? So there's a lot of neat tricks that we like to teach, and right now we have a extremely high federal funds rate, and we're waiting for that to drop. And once it does drop, we are going to have a lot of successful folks on our platform. All the investments that were made right now, all of the gutted, sweated tears that we basically went through, we're going to be different. We're going to be different types of people coming out of this. All right. Well, I hope this was helpful, and I hope this was a good educational lesson on how the economy, going back to Mr. Paul's comment here, um, Paul's comment, how is Powell responsible for what's happening with the economy? I hope that this was able to help you see how interest rates affect the S&P 500 and also the dollar too, and also the mortgage rates, right? For the housing, the 30-year mortgage. Okay. All right, guys. It is always a privilege and honor to serve you guys. We do have our lifetime access sale, one of the biggest sales we're ever going to have. It's never going to be this low before. We are going to be increasing prices in next year. So this will be ending January 30th. It'll be $400 off of our mastering or bundle lifetime access. And it'll be, there'll be a link down below. All right, guys, that's all I have for you. I will see you on the next one.